Buying quality stocks when they are undervalued. This is what this video is about. I'm going to show you 3 high quality stocks that are worth setting a buy limit on or even a buy right now. And I bet you have never heard of at least 2 of them. My name is Thorsten, you maybe already heard about this. I'm the founder of Dividend Stocks Cash. We have more than 100,000 registered members looking for quality stocks on our website and also checking about their fair value. So let's go. And please don't buy just because I am convinced that it is a good stock. Make your due diligence first. The first stock you have never heard about is Walmart de Mexico. Walmart de Mexico, of course. Here is Walmart. Walmart de Mexico is a subsidiary of Walmart. Walmart owns 70% on Walmart de Mexico. And why should this Walmart de Mexico be maybe interesting, or why could you prefer this to Walmart? Maybe because of dividends. Dividend yield is close to 4% compared to 1.3% on Walmart, the original. And we click Walmart de Mexico, so you see already the nice fundamentals. But in contrast, the payout ratio is much higher on Walmart de Mexico. It's close to or around 90% versus just 34% for Walmart, which means that dividends are not 100% safe. You can see it here. And the light blue bar here indicates that it is special dividends. Walmart de Mexico, they pay special dividends on the same date, on the same day as the regular dividend. You can see it here, by the way, in the dividend profile. There's a nice description about what they do. And then here you have the latest dividend payments. And why it's also interesting, could you prefer Walmart de Mexico? I think because growth is more dynamic. They have higher growth. For example, the compound annual growth rate, the annual average growth of earnings within the last 5 years is 8% versus 6% for in case of Walmart. And also here the same with revenues, 8% Walmart de Mexico versus close to 5% regarding Walmart. And what's also interesting is if you look at Walmart, we see that margins are declining, operating margins. If you look at Walmart de Mexico, we see that operating margins are increasing. What's also interesting is if we may look at the multiples and we compare multiples of Walmart with Walmart de Mexico, you see that in the past, Walmart de Mexico had higher price earnings compared to Walmart, but this changed just recently. This changed. Now Walmart is higher valued, more expensive stock, higher priced than Walmart de Mexico. One more reason maybe to set on Walmart de Mexico. So now let's check the fair value of the stock. We use the adjusted earnings to do so, and here the fair value based on the adjusted earnings. And you see here price earnings on average it was close to 25. Current price earnings is 22.7, so less than the average valuation. This indicates undervaluation. Here you see the fair values each year according to analyst estimates based on this average price earnings. And now we can calculate here our expected annual yield, which is close to 16%, and I am sure this is higher than the expected annual yield for Walmart. You can find it out yourself. So this is the first stock. The second stock you have never heard about is called Shimadzu. Shimadzu from Japan. It's also a dividend payer, and what they do is, or what you are doing if you invest in this company, you basically invest in Japanese art of engineering. And it's a nice stock. It's even a 10-bagger if you are invested long enough. Here, 900% capital gains you need. For 10 bagger, capital gains this year we have 966%. Okay, agreed, this is starting from the year 2001 somewhere. But you can also see here that the stock price already climbed to 5,400 Japanese yen, and now we have less than 4,000. So we are in a phase of a correction, and maybe this is a nice buying opportunity, because if you look at the fundamentals here, we see nice earnings growth, even accelerated earnings growth, and still the stock price went down. Might be a buying opportunity. So what do they do? We have the website here, and what I like this is their motto or their slogans. They want to contribute to human life and well-being. This is why they do pharma, medical tech, and also investing in food science, if it's called like this. They also want to contribute to well-being of the earth. They are also environment technology. They also want to contribute to the industrial development and to a safe and secure society. This is why they also do, for example, aviation, and they are even in the semiconductor industry. So there's a lot of things they are doing, and you can also see it here. You can also see it, of course, on our website. We have a description here what they are doing. We have the segments here, and you also get an idea of what they are doing if you look at the segments. And as we see, it works very well. It's basically close to conglomerate, but it works much better than 3M, for example. It's more like Illinois Toolworks. And what we also see is a nice growing margins, growing revenues, growing earnings. We already had this. We have growing dividends. Dividends are as high as 1.4% right now, but which is much more. It's not super high, but it's more than we got in the past, with just 0.6% back in August 21. And we have dynamic growth of dividends, at least in the past, from 15% each year on average within the last 5 years. And now I need to say you a little but. Here we have nice earnings growth, but this dynamic earnings growth is also thanks to devaluation or weakness of the Japanese yen. Because you see here the regions, they sell more than half of their sales are done abroad. So their sales, or 44% of their sales, are within Japan, homeland, but everything else is made abroad. And the weakening Japanese yen makes their revenues, or increases their revenues. And this will not continue like this, and this is why analysts also estimate that the climb rate or increase rate of the earnings will go down in the near future. We need to consider this when they do the fair value calculation. What we see here, most important items of the balance sheet, and as usual, Japanese stocks, many Japanese stocks have no debt, are completely debt-free, and have a lot of money, a lot of cash, and it's the same for Shimadzu. So let's go to the valuation of the stock, and we use the reported earnings in this case, and then we see here and we have here undervaluation. We have here average multiple of 25. Today stock is valued with 23, so it's a little bit less, but I would make it a little bit more conservative. I would bring the fair value a little bit down, and then the fair value here, the average we use for the valuation or calculation of the fair value, I will bring it down from 23.6 to 22, and now the fair value goes down as well. And now we have an annual expected yield, including dividends, of 7.6%. This is not that much. It's in line with your overall market expectation or performance. And this is, for example, possibility where you can add a buy limit close to 3,500 yen, for example. You could set a buy limit, and then you have then expected annual yield of 30%. So what you can do is you go here and say, hey, I want buy limit 3,500 Japanese yen. It's already selected. You make save, and then you will be notified when the stock price drops as low as this. And we see 3,500 Japanese yen was already reached or close to back in October last year. So next stock, 3 of 3, and this stock you maybe are not aware of. You are aware that the company exists, but maybe not of the stock, is Nasdaq. Nasdaq is nice. It's the home of the Magnificent Seven, I guess. I'm not sure if all 7, but at least it will be most of the 7. Market capitalization of more than 30 billion US dollar. Also dividend payer. Dividend around the same level as Shimadzu with around 1.5%. You can see it here. And also, like the case for Shimadzu, dividends were already much lower in the past. We have also dynamic dividend growth here of around 10% average within the last 5 years. And it's also a 10-bagger, you can believe me. And they earn their money with many different things. Not only if you and me, we are ordering a stock or we are buying or selling stocks which are listed on Nasdaq. Also the companies listed on Nasdaq, they also pay listing fees if you want to be listed with an IPO on Nasdaq. You pay IPO fees. Of course, they also sell market data, pricing, for example. They also have their own software, and they expand in this software realm. Software for the companies which are listed there, for example, for the investor relations, for the compliance, and they do a lot of acquisitions. You can see it here that the goodwill is really high. For example, last year they made a multi-billion acquisition of a software company called Adenza. And it works, you need to say, really it works. You can see it here, growing earnings, especially adjusted earnings, growing dividends as well, growing margins. But it's a little bit cyclical in nature, the business. So when the stock market goes up, when there's a good mood on the stock market, otherwise when a lot of IPOs is going on, they earn more cash, contrary to when the market is in bad shape. So this is a little bit a cyclical investment, and this is why you should buy this company when the mood is down. You should invest anti-cyclical or make an anti-cyclical buy. So although here you see that the earnings growth is not that cyclical, yeah, but it is still a little. And we add the fair value here, we zoom in, and then you can see nicely that the stock was really heavily overvalued back in 21 for a longer period, then a second overvaluation at the end of 22, and now back to fair value. And now we need to wait a little bit for a correction, because right now, in my point of view, the expected annual yield of 6.5% till 26 is not so super attractive. Here I would set buy limit of around 50 US dollar, for example. We already were even lower than 50 US dollar back in autumn of last year. And then here you have an expected annual yield already in double-digit range. So this would be really attractive. So this is the third company I wanted to show you. I think it's nice to know about this investment possibilities. Once, if they are abroad, or second, if they are still in the United States. Many viewers here are from the United States. This is why I say abroad, but also your companies like Nasdaq. You don't always invest into the biggest names listed on Nasdaq. You can also invest in Nasdaq itself when the stock price is attractively valued, or when the stock is attractively valued. Okay, these were the 3 stocks. I hope one of them is a stock at least you like. You can also drop a comment below if you think there's a stock worth analyzing in the next video. Thanks for watching. See you next time. Bye bye.